Hello everyone, welcome to our daily market analysis. And today is 14th of February 2023, and I'm going to discuss about gold today. Okay, so today we will have some events, some high impact news. Of course, in the US we will have the CPI, Consumer Price Index, monthly, yearly, and core CPI. What is CPI? CPI is one of the indicators that will be formulated to understand where is the inflation is. So to know how much inflation happened in the US, you can only see in the CPI yearly. So this is the annual inflation, the annual condition in the US. So forecasted is 6.2%, with previously from last month is 6.5%. So 6.2% means that the inflation is lower, so it's better for the economy. Yes, even though the price is rising, the price is rising, meaning the demand is rising, this consumer price index, price in the consumer is rising, but majority in the country, if the price is to rise too quickly, is not good for the country. So since the inflation is one of the major thing that we have to understand for this particular year, of course. So the inflation is slower is good for the currency. But the thing is, if the inflation is slower and slower and slower, means the interest rate will be halted. So it won't be as much as it won't be rise as much as previously. So if this inflation is raised, it is lower, meaning the interest rate might be even maybe unchanged for the next meeting. But yeah, people market will see about that. Okay. So the core PCPI is the same CPI, but it excluding food and energy. So which one we should be take a look? So of course we will see the whole general CPI, which is the CPI yearly 6.2%. So it forecasted 6.5% to 6.2% for this month, for the last month. Okay, so now let's go to the chart. Okay, so I already opened gold, okay. So gold is just yesterday it break our support levels, so it goes lower and lower and lower. So now let's find the new support. Okay, the new support is of course below here. We can find from the history here. Okay, this is one of the lowest support that we can take for this today. Okay, okay. So 1826 back to the previous support that we used to use, and this one 1841. So this is going to be the support for gold, and the resistance will be around here, but we must see from the updated one, and from the history, of course, around here, of course, around here. Okay, but okay, after we see from this past, we must go to the current condition. Okay, so this is going to be the our resistance level. This is the updated one, 1862, and the okay we have the lower one. Okay, around this number 1862 and 1873. Okay, so you can see here, you can see here that the stochastic is near the oversold level. Near the oversold level, it's going to be a little bit higher. It's trying to go cross to higher, but because of this the shape of this stochastic is not clearly and is not crossed yet, so it's going to be a little bit more lower from my view. That is going to be lower and is going to be targeting the oversold level. So from my point of view, it's going to be a little bit more lower. So because of this price is still below our 20 period moving average, that it means that there's possibility that the price is going to be more lower. So I'm looking at the possible today that the price is going to be more lower if looking at the technical way. So if the CPI suddenly showing that the slower condition, means there's a possibility that gold might be jump higher and try to reach this 20 period moving average. So there's a two possibility. If following the technical, it's going to be lower and touch the support level at 18,841, yeah, 18,841. Meanwhile, if following the result for the forecasted one, if if the result following the forecasted or better than forecasted, meaning slower than forecasted, mean there's a possibility that gold might go a little bit higher to reach our 20 period moving average at 1863 and our resistance level at 1862. Okay, so that's it for today. Have a great trade.